Hey everyone, welcome back to Corporate Decoder. Today we're diving into Kewaunee Scientific's latest quarterly report, and let's just say their last 3 months have been a bit of a roller coaster with some serious ups and downs to discuss. Alright, so Kewaunee Scientific Corporation, they've just dropped their 10Q report for the quarter ending July 31st of 2025. Think of this as a postcard from the company telling us how they did financially during that 3-month period, and it looks like things have gotten busier and more expensive. Let's jump right into the numbers because that's where the real story is. Their net sales, which is basically how much money they brought in, jumped significantly. For the 3 months ending July 31, $4 million in sales. That's a big leap from the $44 million they saw in the same period last year. So more customers are buying their stuff. This increase in sales also means their gross profit, that's what's left after they pay for the materials and direct costs to make their products, also went up nicely. They made $20.9 million last year. That's a solid improvement. From the bottom line, their net earnings also looked good. They came in at $3.1 million for the quarter, up from $2.2 million the previous year. So by those main metrics, it seems like business is booming compared to last year. But why the big jump? Well, a huge part of this story is an acquisition they completed back on November 1st, 2024. They bought a company called New Air Inc. This company makes equipment for labs and pharmacies. Think things like safety cabinets and incubators. Kewaunee paid about $55 million for it, with most of that financed. This acquisition seems to be a big driver for their increased sales. Now let's look at their balance sheet, which is like a snapshot of what they own and what they owe at a specific point in time. Their total assets, that's everything the company owns, were $93.50, $20, and $94.20, 35, and toffee 25. This is a slight decrease from $94.7 million bars at the end of April 2025. On the flip side, their liabilities, what they owe to others, were $124.6 million at the end of July 2025. Down from $128.4 million at the end of April. So they've managed to trim down some of their debt, specifically their accounts payable, which is what they owe to suppliers, decreased from $27 million to $26 which is what they owe to suppliers, decreased from $27 million to $26.30, their accounts payable, which is what they owe to suppliers, decreased from $27 million to $26.3 million. Looking at the equity section, which represents the owner's stake in the company, their total stockholders' equity went up to $68.9 million from $66.2 million. This is a good sign, showing the company is growing in value for its shareholders. Now, the cash flow statement is super important. It shows how much cash the company is actually generating or using. For the 3 months ending July 31st, 2025, Kewaunee Scientific's operating activities provided $5.8 million in cash. That's a big turnaround from the negative $794,000 they used in the same period last year. The increase in cash from operations is mostly due to the higher sales and better management of things like receivables and payables, despite a dip in deferred revenue. However, they spent $771,000 on capital expenditures, which means investing in new equipment or facilities. This is a pretty standard activity for a growing company. On the financing side, things were a bit mixed. They repaid $750,000 on a term loan. They also had net repayments on short-term borrowings. Overall, their financing activities used $1.5 million in cash. Diving deeper into the notes, we see that the New Air acquisition is really the centerpiece of this quarter. The fair value of the assets they acquired was around $74 million, while the liabilities they took on were about $21 million. A big chunk of that acquisition cost, about $9.8 million, was allocated to customer relationships, and another $4.9 million to trade names and trademarks. These are intangible assets, which means they're valuable, but you can't physically touch them. They're expected to be amortized over several years, meaning their value is gradually expensed. The company also now has a new loan agreement with PNC Bank, which includes a $20 credit facility and a $15 million term loan. This helps fund their operations and the acquisition. The interest rate on the term loan was around 5.91% as of July 2025. Interestingly, they terminated their old revolving credit facility with mid-cap funding IV Trust, and that was a pretty significant move. Their international subsidiaries also have some short-term borrowings for things like overdraft protection, totaling around $495,000 at the end of July 2025. There's also a sale-leaseback financing transaction for their headquarters that's treated as financing. This means they sold their property but leased it back, and essentially it's accounted for like they took out a loan collateralized by the property. This whole setup has a significant amount of imputed interest. They have a lot of future lease payments coming up, both operating and financing leases, totaling quite a bit over the next several years. This is something to keep an eye on as it represents a significant ongoing financial commitment. And speaking of employee incentives, they recorded $431,000 in stock-based compensation expense for the quarter related to their incentive plans. This is a way they reward their employees with company stock. Their income tax expense was $761,000 for the quarter. The effective tax rate was about 19.4%. They also noted a discrete tax benefit from stock issuances this quarter, which helped lower their tax burden for this specific period. They're also keeping an eye on a new tax law, the One Big Beautiful Bill Act, and how it might affect them. Finally, their segment information shows how their different parts of the business are doing. Their domestic operations, which now includes Nuair, brought in 50.8, brought in $14 in Dollarchen, it Irachentined $8 million. The domestic side is clearly the bigger engine now, thanks to that acquisition. Now, looking at these numbers more broadly, Kewaunee Scientific's acquisition of Nuair seems to be a game changer, significantly boosting their sales and overall financial performance. The increase in gross profit and net earnings is impressive. However, all this growth comes with added debt and future lease obligations that will need careful management. They also have a good chunk of intangible assets on their books from the acquisition, which adds a layer of complexity to their valuation. The company is clearly aiming for leadership, which adds a layer of complexity to their valuation. The company is clearly aiming for leadership, which adds a layer of complexity to their valuation. The company is clearly aiming for leadership, which adds a layer of complexity to their valuation. The company is clearly aiming for leadership in the lab furnishing market, and this acquisition is a bold step in that direction. But they're also operating in a market that's influenced by various outside factors like government projects and material costs. So there's always that element of unpredictability. Alright, that's our breakdown of Kewaunee Scientific's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finances. Don't forget to check out our Discord community linked in the description for even more insights and discussions. Thanks for watching. See you next time.